Move on and let's get back to autos. We've got Rakesh Sharma, the ED at Bajaj Auto, joining in to talk about how their business is looking. Rakesh, hi, good morning. Good to have you on ET now. So much happening in the world, Rakesh. I hope your business is going all well. Looking at the numbers, both earnings as well as the monthly sales, things seem to be quite all right.
Yes, good morning. Thriving in chaos.
Till the time it's thriving, it's all good. Tell us more about it. What's the future looking like?
Well, it is a sort of equilibrium, short-term equilibrium, and we don't know when the next disturbance is going to come. But when it comes to the domestic business, we are seeing, with its ups and downs from quarter to quarter, hopefully an annualized rate of growth of the industry at about 5 to 6%, like it has been last year. And that primarily being driven by the top half of the industry, which is the 125cc plus segment. We expect that to grow at almost twice the rate of the average rate. The penetration of electric vehicles should continue in the same manner, and that's very, very heartening because despite the reduction in subsidies, we can see that both in two-wheelers and three-wheelers, penetration is not flagging off. And in the international business, which constitutes almost 40% of our revenue, we find that Africa is steady, though still underperforming, but we are cautiously watching it because we don't want to be having an excess stock situation there. But Latin America has done extremely well. It's become the largest region amongst emerging markets for motorcycles in volume terms, and it's almost twice that of Africa now in value terms. And we had anticipated this quite early on and taken a lot of moves in the Latin American continent that is really helping us. Asia is also steady. I think the cost environment is steady, though there is a headwind we are facing with the rupee appreciating a little bit. So that takes away. But the cost environment is, with the noble metals being slightly up, but the base metals slightly being down. There are things which are up and down, but overall, the cost environment is looking steady.
Good morning, Nikunj also joining in, Mr. Sharma. Now, when I speak to shareholders, some of your veteran investors, they say the following, that look, Bajaj is innovating a lot, from bikes to exports to reorienting themselves in the whole KTM experience and now EVs. But what about the bread and butter business, their domestic entry-level bike business? When will they get the market share back? When will we get a sense that Bajaj is actually regaining its market share and is now really inching up, not inching up, but is really jumping higher?
Good morning, Nikun. But let me tell you, the bread and butter is also the three-wheeler business and the international business. So we've got lots of toasts.
Lots of breads. Mr. Bhargav made this thing very famous that the butter from the toast is missing. Every auto guy now uses bread and butter after that.
Yeah. So, but your question is a very pertinent one. Just before I come to it, one of the things which I find in Bajaj Auto is that it's quite a versatile business in the sense that we've got international business, we've got three-wheeler business, and we've got domestic motorcycles business, now the EV business, and there's a substantial spare parts business. So there is an inherent mitigation of risk which is there. Even in international business, the spread in 100 countries, like the recent this thing, like Africa just fell off last year, and the recovery has also been muted. Had we not got a great competitive position in Latin America, we would not have been able to recover like this. And when I'm saying recovery, I'm talking about value recovery and EBITDA recovery, because we look at both the top line and bottom line equally strongly. So, but So that's an inherent sort of architecture of the business which has evolved over the last 10, 20 years because of the pursuit of a deliberate strategy. Now, coming to this point about the market share in entry-level bikes. Entry-level bikes, certainly from a top-line perspective, they constitute about 48% of the Indian industry. That is reducing, that contribution is reducing, but at a very slow pace. We will go for market share in this area as long as it is a blue ocean. Currently, it is red ocean, and we find that if we have to optimize growth, competitive position, and profitability, we find that that optimization is not possible in the bottom half. To pursue market share, the degrees of freedom in terms of innovation, etc., are slender. And what happens is that you end up using the price card, and that is not sustainable, and that erodes the bottom line. So we are present over there. We are trying, and we will continue to try. If you see the last 3-4 years, we have tried various technical interventions, 5-speed and tubeless tires, digital consoles, even ABS, but with marginal success. What is really needed is the pricing strategy, and I don't think there are a big pricing breakthroughs possible in the entry level. So we are happy to sort of take a very measured look at it and not be very aggressive. I'm not saying, we're not at all saying that we'll vacate it. It's a large segment. We will be there, but we are there at our terms. We are not there singularly with the objective of increasing market share at the substantial expense of the bottom line.
Margins 20%, and that's classic Bajaj Auto. Margins have come back. I think we have had this chat that when will the time come then Bajaj Auto will go back to 20%. Guess for 3 quarters now, margins are very impressive. Can I say that going forward also you will continue to focus on categories, product and innovation where you would like to keep your margin in and around 20%? So entry level, if does not offer you 20%, it's a good to have business, but it's a business where you are happy to skim it down.
By the way, Nikunj, it's 6 quarters of 20% margin.
Oh, 6 now. I was counting 3.
Yeah. But you may find this very surprising. But the point is that it is not that we sit in the conference room and say that, listen, we got to hit 20% and all that. It's not like that. Obviously, we have a very sharp focus on the bottom line, but our margins are the consequence of pursuing each strategy. Now, if the Africa business certainly expands, it will have a adverse impact on the margins. If the EV business, and what we are very happy about, which I must call out, is that the EV business constitutes now about 21% of our domestic revenues. It was 10% last year. And obviously, it is much below the 20% mark. And we've been able to navigate through this rise of the EV business and still keep to 20% margin. So this is a very dynamic management which has to be done month on month, quarter on quarter. But it is very difficult for me, genuinely, for me to say that, yes, we will be on point at 20%, because at the end of the day, it's a blend between EV, three-wheelers, motorcycles, international business, currency movements, etc. So, but yes, one thing is for sure, that we will always aim to be best in class as it goes for on the margin front too.
Hi, good morning, Mr. Rakesh. This is Shrishti also joining in. But give us some sense on the export outlook, because though the commentary, or rather the guidance, stands to be really robust of 15 to 20%, I guess you have guided for. But some reports do suggest that you have taken price cuts in the African market, almost a 4 to 5% of price cut recently, what Bajaj Auto has taken. Give us some sense that how true is that, and if it's hold true, then these price cuts are likely to sustain?
See, we do expect quarter on quarter, something like a 15% increase, 15 to 20% increase on in exports, largely driven by, I would say, Latin America and parts of Asia. We monitor 30 countries very closely because they account for about 75% of the industry. These 30 countries, 26 have shown growth even in quarter four. And collectively, they've grown at about 26%. Collectively, Bajaj Auto has grown at 31% in these places. So we are outpacing these industries. So there is a basis on which we have said that. When it comes to some of the price cuts which you're talking about, again, this is within the overall, having an overall sort of an EBITDA approach to each business unit. Some markets where we are having an overwhelming share, where Bajaj Auto actually defines the industry, where we have 60% of the industry and the next person is 10%, 5%. And sometimes we feel that we have to continue to keep the industry ticking. There may have to be price adjustments. So the price cuts which we have taken in one or two places, for example, in Uganda, it is a 90% market share. Now, it is not so much to gain share. We can't go above 90%. I mean, it's between 85 and 90. Now, we can't go above that. But we want to keep the industry's wheel moving. We monitor the payback period because all these markets, African markets, it's a commercial purchase. This is not a personal purchase. Bikes are used as taxis. So we monitor the payback period of the customers, the drivers, riders who are buying these as to how many months they recover. And when it falls below a certain point, we do try to make adjustments, which in better times we recover. So this is not a very tactical play aimed at gaining a share here or there. It is about keeping the industry ticking.
And along with that, Rakesh, in the con call you mentioned that the final certification for rare earth magnets from China is still pending. Now, help us understand, if the supply is disrupted post-July, how severe could the production impact be, not just for Bajaj Auto, but for the broader Indian EV ecosystem? Do you believe that finding any of the suppliers in the short term or alternative supplier will be a challenge for the industry?
Actually, the process which has been outlined is like this, that it is a self-certification which the importer has to do, which in our case or the industry's case is mainly the vendor. And that has to be then certified by a couple of agencies within our ministries. And then it goes to the Chinese embassy in India, which again certifies it and then sends it across to the US, to China, I'm sorry. And over there is a two-step certification or an approval process, which is at a provincial level, which is the province in which the exporter would be based. And after that, in China's Ministry of Commerce. Over 30 applications have been processed, even by the Chinese embassy over here, and sent to China, but we have not yet heard back. The first thing which we are awaiting is to see how smooth this process is going to be, how long it's going to take. And as soon as some of the approvals start to come, we will get an understanding of that. That, I think, if that happens smoothly and that we'll move or lengthen the supply chain period, but if the approvals for non-military users are forthcoming, then it's all right. It's just that we have to make sure, we have to manage the supply chain time periods. Now, if this doesn't happen at all, if something breaks down, which I'm hoping will not, then I think developing alternate sources is not, it's a very medium-term option, because China has over 80% share. The extraction and refining process is very complex and it takes time to master it. And other places have the reserves, but they will need that time. And to substitute the component completely also will require its integration into the vehicle systems, testing, validation. So all those are midterm. So therefore, in short term, we are just hoping that this process works. If it doesn't, then for sure in Bajaj Auto, we will start facing disruption from July onwards. And whatever I hear from my industry colleagues, a lot of companies will see disruption in July onwards in one line or the other.
Right, Rakesh, so good having you on the show today. Thank you so much for taking the time out and joining us today morning.
My pleasure. Thank you.
All right, but with this, viewers, it's not.
If you like this video, then like, share and subscribe to ET Now.